What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's video we're going to take a look at how far can the stock market go and what price targets can we expect to see. Before we get into the charts, please help me out by smashing that like button and go ahead and subscribe if you're new so you can follow along with all of my daily updates. First up, we'll look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, so some things you need to know to understand what we're going to be looking at today is we're looking at a weekly chart of the SPX, which is the S&P 500 index, and we're going to look at a more macro level view using Elliott wave analysis and Fibonacci extension levels. So the one thing we say on the Stocks channel is we think we're in this super cycle where we've been going up ever since the 90s into today, and we think we're in wave 3 of a 5-wave cycle. So to draw that out, we would have ended wave 1 at the top of 2000. We would have had our correction wave that ended at the bottom of 2009. And ever since the bottom of 2009, we've been in this bull market, which is wave 3. And we're trying to figure out where wave 3 is going to end. So typically the wave 3 would end at the 2.618 Fibonacci extension level, which on the SPX is a level of 3611. Now that would be our price target for the next wave 3. However, we could see a melt up scenario where we go all the way up to this 4040 level. So we're not going to talk about wave 4 and wave 5 today. So I'm just going to go ahead and focus on wave 3. So our price target on the S&P 500 is this 3611 level. However, there is the possibility that we melt up past this level and we could actually extend into a 3x Fibonacci extension, which would bring us to the 4000s. So now that you know where these price targets are derived from, let's go ahead and zoom in a little bit on today's price action. So we closed the week at a price target of 35.85, which is just below our price target of 36.11. We also had that day where the vaccine news was announced where we spiked up over that level, but we gave back all of those prices and we actually closed below this resistance level. So the first price target we're watching is just barely above. So if we go ahead and measure from Friday's close to that level, that's less than 1% upside before we're going to find significant resistance. Now there is the possibility that we get into our melt up scenario and then we would start looking for the 4000 levels. So if we go from Friday's close to a melt up scenario, there's about 13% more upside to the stock market for the S&P 500. So as we've been talking about on the Stocks channel, it is likely that we are going to see a melt up scenario because of the current conditions going on in the stock market. So if we look at the trend on the weekly chart, this is more of a macro level view, and we still see that extreme bullish price action and bullish trending. All of the moving averages are positive sloping to the bulls momentum side, which is only pushing price higher and higher. The price action is still closing above the 5 EMA. So we have extreme bullish price action and very good bullish trending. So we do expect to see stocks continue to go higher. Now this magenta and purple trend line also have been calling critical market tops, as you can see going back to August and September. And if we scroll out, it also called the top in February of 2020. So these trend lines have been very critical in calling market tops. But as of Friday on the weekly chart, we have now closed above those trend lines. So that is a bullish close because you can see all of the other weeks we did not close above those trend lines, even though on daily price action we were above them at some point. Closing prices mean much more when you're doing technical analysis. So this was actually a big deal on Friday, closing above these trend lines, but we have such a small margin of upside before we get into another very critical resistance level. So it's likely we're going to continue to see volatility in the S&P 500, but there is also that possibility of a melt up scenario where we blast right through 3611 and start heading higher to the 4000s. So that's definitely something we're going to keep an eye on, and those are our two price targets for the near future. So obviously one price target is less than 1% away, but our next price target is over 12% upside before we find a next level of resistance. And there could be little resistance if we break above 3611. This is sort of an open air gap where there's been no price action, and we could see a quick move to the 4000s if we do get that melt up scenario. So I want to switch over to a monthly chart, and we see that the candle bodies ever since we've had this volatility are getting much larger. If we go back to a time when there was little volatility from 2019 to early 2020, you can see that the candle bodies were a lot smaller. So as a possible scenario, if the stock market continues to climb higher, we could assume volatility would head lower because fear would be leaving the market and the market would start grinding higher. So I want to take a bar chart pattern from 2019 to early 2020 and move it over the 5 EMA. Somewhere around this level, we see we would get to 4,000 on the S&P 500. And timing wise, if we follow that bar chart pattern, That brings us out to November of 2021. So that does seem possible that in the next year, we could see price action where we sort of kind of go sideways but slowly creeping higher in that low volatility, low VIX market where we just continue to grind higher. So by 2021 of November, we could be at S&P 500 levels of 4,000. So once we get to 4,000s, let's just say we get there by November of 2021, and of course this is all just speculation, then we would have to say that wave 3 is ending in the super cycle and we're going into a super cycle wave 4, which would be the next bear market in the stock market. So bear markets, as you saw from 2000 to 2009, could last a long time and there could be a huge move in the market that goes sideways. But it is likely that wave 3 is going to be ending sometime in the next 4 years. So this seems like the most likely scenario if we start getting a melt up. Obviously the bars might not look exactly like shown here, but it is possible if we start heading higher that fear is going to leave the market and we could see smaller candles. However, it's also possible that we go parabolic and we just get there in a flash over the next few months, and then we have a huge pullback and a huge overcorrection because we went too far too fast. So I'm not too worried about how fast we get there or how long it takes, but it is possible that we do see S&P 500 levels of 4,000 if we start breaking and closing above this 3611 level. And remember, we're looking at weekly and monthly charts here, so this is a macro level view. We're not just looking at daily swings. If you're enjoying this macro level view on the stock market, please let me know by smashing that like button. So the next thing I want to do is take a look at the Nasdaq 100, and this is the NDX that we're looking at. So a very similar scenario, we're looking at a wave 1, a correction down to a wave 2, and now we think we're in this super cycle wave 3, and we're trying to figure out where wave 3 is going to end. So we have the same Fibonacci extension levels for the NDX up here, and you can see the 2.618 is a level of 12,773. If we break through that, that would be the melt up scenario for the Nasdaq 100, and that would bring us up to the next level, which is 14,488. So let's go ahead and zoom in on the price action for the NDX, and of course we're looking at the weekly chart again, so this is a macro level view, and you can see the Nasdaq 100 looks a little different than the S&P 500. On the S&P 500, we saw breakouts to new all-time highs and over significant trend lines, and on the Nasdaq 100, we see we're still in this consolidation wedge, and the price action is still closing within the wedge on the weekly chart. So the Nasdaq 100 is still in a consolidation and we still have significant more upside. So if we measure from Friday's close to our price target for the Nasdaq 100, that's about a 7% climb until we hit that price level. Now, if the Nasdaq 100 hits a melt up scenario, we would go to our next price target, which from Friday's close would be over 20% more upside. So there's a lot more upside in the stock market, especially if we start hitting a melt up scenario. For the Nasdaq 100, it's likely going to hit its price target, which would mean the S&P 500 is likely going to benefit from technology sector's strength. So it would favor the melt up scenario because there's 7% more upside on the Nasdaq 100 until we hit our price target. That 7% upside is likely to push the S&P 500 through its first price target. So that's why on the stocks channel, I say I think the melt up scenario is coming, and we're likely going to see extreme bullish price action for the next few weeks until we finish out this melt up scenario. After the melt up's over, we could see a significant correction, but we're just going to play it day by day. Remember, this is macro level speculation that we're looking at, and none of this has to happen the way I'm saying it. It's just a possibility the way I'm seeing the charts from the weekly and monthly level that we're going to see this melt up scenario play out. So you can see on the Nasdaq 100, we also have that extreme bullish price action in trending. We're still closing above that 5 EMA, so the price action looks very bullish, and all of the trends are very strong to the bull side. All of these moving averages are separated from each other and positively sloping, which means that we have strong bullish momentum. So when we have strong trending, the trend is always your friend, and that's going to continue to push prices higher. So while we can see prices swing day to day and go higher and lower, the overall trend of this market is pushing prices higher in the long term. So going over to a monthly chart, you can see the same thing. All of the moving averages are extremely bullish, and the price action is still extremely bullish because we're still closing over the 5 EMA. So from a macro level view, we are bullish on the stock market because the trends and the price action are bullish, and we're unbiased and we follow the price action and we follow the trends on the stocks channel. So the first price target we want to see hit before we get bearish or even think about a pullback significantly in the market is this 12,778 level. So that's why on the stocks channel, we're going to say the stock market is going to continue to go higher, and we're more than likely going to continue to see this melt up scenario play out. Now, obviously, everything is susceptible to change at the drop of a hat. And if we start to see anything that says otherwise, obviously we'll let you know right here on the stocks channel. So if you enjoy this macro level view on the market, please let me know by smashing that like button. And if you want to follow along with all of my daily updates, please go ahead and smash that subscribe button. Thanks for watching, everybody. I hope you enjoyed this special update. And as always, I will see you in the next episode.